Market was Siddharth Bothra, fund manager at Motilal Oswal Asset Management Company, joins us right now on the show. Siddharth, good having you. Thanks much for taking the time out. This is Neeraj here. Good afternoon.
Good afternoon. Thanks for having me.
Yeah, pleasure is ours. Well, some of your portfolios must be doing really well because I'm guessing that there was some bit of value buying that would have been there in your funds. But January has been a month which has been marked by some bit of return to value, some bit of return to, not by choice, but not by design, but by evidence to the broader end of the spectrum. Do you expect this to continue?
I think the market had become too polarized. If you even go back in the last, I would say in the last 2-3 months, we were anyway seeing the market breadth broadening. And, I think now it's getting accelerated, and hence it's becoming more and more visible. To that extent, it's definitely positive for the market. And, with regard to our portfolios and all, our portfolios have always been very bottom up, and it's very stock specific, and it takes into account different factors which keep changing in the markets at different times. So it has stocks which are accustomed in a way gonna do in different times accustomed to all those factor changes that would likely see in the market.
Okay, so which is fine. So as far as your portfolios, and you mentioned that now it is getting noticed because it is getting accelerated. So would you believe that the next few months, barring something unforeseen happening, could actually see the value stocks or the broader end of the spectrum companies, or both put together, do better?
I think market breadth should increasingly, expand, because what we are seeing is that, if you look at most of the economic indicators, they definitely seem to be nearing their lows, or in some cases seem to have bottomed out. So as going 2-3 quarters ahead, as some of these lead indicators start improving and the base also starts coming into effect, I think we will see this market breadth increasing a bit more, and I would kind of agree with you that this trend should sustain in the near to medium term.
All right. Nifty, mid cap and small cap, obviously the outperformance continues. Siddharth, let's talk about individual trends now that you're spotting for 2020. And right. From the Motilal Oswal stable, is there any conviction trade that you would like to share with us?
So I think, what we have been seeing in the last, in the near term, what we've been seeing is that some of the segments are emerging as big winners, while when you look at the consumer side, while the organized staples or even the discretionaries, while they have struggled, one segment which has benefited significantly is the organized retail. So I think that's emerging as a big opportunity, which is very similar to where we thought insurance was a couple of years back, where despite the entire slowdown in the overall economy and the markets, the insurance companies had done significantly well. So I think organized retail would be one which I think will stand out in the near term.
Retail, okay. Disappointments though are anticipated within a few of these pockets yet again. The start of 2020 so far at least has not been good for the telecom space. But for Bharti Airtel in particular, there seems to be this opportunity that has come out from this disappointment that we got in yesterday's session from the verdict that came out. Do you feel that it's capable of capitalizing on this opportunity that could probably prevail?
I think in telecom, what I think investors are excited about is the industry consolidation which has happened. So this is a very large market, and it's got a long runway, and it increasingly looks like there would be very limited players there. And this kind of industry consolidation over a long period of time, in the long run, would definitely benefit the players who will survive this entire turbulent phase and continue to then reap the benefits of the entire growth that the sector sees. So I think increasingly people are very clear as to who are these two, now it looks like just two key players. So the industry structure as such is so attractive that I think companies who play this right on long-term basis should do very well.
Remains to be seen whether there is any sort of intervention now which comes from government side in order to provide any sort of relaxation or relief with regard to the dues. Siddharth, good afternoon. The other space which has been buzzing and started gaining traction is the pharma space. We're finally seeing certain stocks moving higher. We've got Torrent Pharma which is trading at its life highs today. And this is a space which has not done well in the last 3 or 4 years. And the reasons, of course, we know there is pricing pressure, US FDA concerns. Is this the area you guys are looking at?
Definitely. I think, there are some very good ideas in this entire space. If you look at some of our biggest winners in the last 1 year have been in the pharma space. Like when you look at my fund F25, one of the best performing stock has been Abbott. So if you look at the domestic pharma, already it had got a bit re-rated in the last 1 year. Now increasingly we are seeing, even the export oriented or the contract manufacturers also doing very well. So I think the pharma space is one where currently I would agree with you that the entire space is looking very attractive. Some of these stocks, as you mentioned, have not just 3-4 years, for almost like 4-5. I mean, for a very long period of time, they have been in the doldrums because they have been investing on the R&D side, and the US market has been very challenging. So we are seeing two trends here. One is that the domestic side of their business now, to a large extent, kind of covers up their large portion of their market cap, which we see today. And we are definitely seeing some improvement on the US market also. So pharma is definitely one segment which looks very attractive from here.
The other key holdings of the fund you mentioned, Siddharth, the private banks, and we've seen all these banks, be it ICICI Bank, Kotak Mahindra Bank, doing pretty well, and of course HDFC Bank has been performing consistently for last many years. What's the outlook going ahead? Do you expect the sort of returns that we've seen in the recent past from these private bankers will continue? Or there could be more concerns now coming in from the retail book, which majority of these banks are shifting focus to?
So I think many of these retail banks have been, great compounders over not just some years, but now almost like, couple of them are almost for some decades now. I think the key thing here is that you have to distinguish within these segments. So the concern that you raised on the retail side or the consumer side is a valid one. But I think, even within that, you will have, great variance. There would be some companies, which have their systems in place, which they have their entire risk system in place, are using technology in a big way. So I think there will be, a fine distinguishing happening within this as well. And I think some of these companies, the opportunity size looks like, as big as it was in the past. Because still, when you look at the household leverage, it's amongst the lower ones in India. The opportunity sizes are increasing, and as in when you look at the overall size of the market, I mean the shrinkage that we have seen on the non-banking or on the NBFC side or even on the PSU side has benefited them in a big way. And it looks like this advantage is only going to continue. So I think this is one sector where I think the big will become bigger, and they will continue to benefit in a big way, and going forward would continue to be positive on them.
Siddharth, just at least from one follow-up question to an earlier answer that you gave, you likened organized retail to where insurance was 2 years ago. Why that simile, and do you reckon that growth rates could actually be similar, though it's difficult to compare them because the metrics are completely different, but why do you liken the two?
Okay, so the comparison I was making is more for our portfolio, like, when you look at the last 1-2 years, the stocks which did very well for us were insurance stocks. And what I also meant was that this was one sector where, the growth was almost insulated from the overall market. So despite the fact that we saw deceleration in growth across almost all sectors, this was one sector where the growth actually accelerated in a big way. And many of these stocks were new; they were not listed earlier, and so they were not. There was some level of under ownership, and also even on the understanding side, some of these companies were not very well understood. I think some kind of a similar opportunity exists today in retail, where many of the companies which are there don't have a very long history. Some of them have been listed for a limited period of time, and even in this environment, I think the growth there has been very strong. And while near term, many sectors, while we are expecting some recovery to happen, but the near-term growth that we can see is still weak, whereas these companies, I think, could actually accelerate growth from here. And as and when the economic recovery picks up, they would benefit even more. So I meant it more from that perspective that, for my portfolio, I think the way, the insurance stocks completely stood out in the last, say, 1 or 2 years. I feel organized retail could be one sector where you could find some opportunities which could, completely stand out on the growth side compared to other sectors.